Hey, everybody, and welcome to Looking at the Markets with David Modell. I know that you guys love technical analysis, you love charting, you love to look at those candlesticks, and you want some insight into how best to be a trader that is technically oriented. We love fundamentals too, but I know you love that chart stuff, and we've got a chart expert here right now. It is Miss Latoya, and man, she's going to show you some charts and she's going to give you some secrets, some insider secrets on how to get the most out of your charts. So, Miss Latoya, welcome to Looking at the Markets.
Hello, David. How are you? And thank you for having me.
Yeah, it's great to have you. It's been a long time in the waiting, and you're finally here. And I see some amazing looking charting software and some cool looking candlestick charts. So
Oh,
first,
thank you.
so can you just start out real quickly telling us, about your website and what you do?
All right, everyone. Well, my name is Latoya, and I am a professional day trader. And what I mean by professional, I've been doing this for a living since 2012, but I've been involved in the market since 2007. And I started off as a swing trader, working my 9 to 5 while holding some stocks and letting time go so it can work out. So that's classified as swing trading until basically I got enough capital, I should say, and enough skill to actually take this seriously and do it for a living. So, since I've been doing this for a living, I also started an educational company teaching other people how to trade in the most simplistic way. Stocks, forex, futures, and options, those are all the things that I trade currently. So, we like to teach people how to trade in the most simplistic way as possible. So, what you're looking at here is naked charting. So, my platform, to be exact, my website where you can find me at is theprofitroom.com. So, that's where you can find me.
Got it. Theprofitroom.com. I'm going to put that
Correct.
link in the description below this video, so you're going to want to click on that if you're watching this. But don't forget to finish this whole video first, because we're going to give you some secrets for day traders. Or when you're done watching this video, just go to your browser and type in theprofitroom.com. So what are we looking at right now?
All right. So what I'm going to do is based off of what I traded today. So I provide trade alerts pretty much like any other educational service. But more importantly, I like to provide trade alerts and run a trading room so people can see the materials that are being taught via our content is the same thing we apply every day to trading. These are the basic principles. So what you're looking at are two different charts, one with JP Morgan, one is also with Johnson and Johnson. Now, JP Morgan today, I have both up on a daily time frame. This was a day trade. Now, what you're looking at now, the way this opened, it pretty much opened under the prior day's low. So just keep that in mind. So one thing that I was looking at when it came to JP Morgan, was it going to be a good buy? The question, that was the question. So the answer to that was yes, but based off of a few things. So the technical buy point that I entered this trade was at 114.01. And I'll show you exactly how I came to that entry point. More importantly, the analysis to take it higher and exactly where would have been a nice level of resistance. So I was also looking at the prior day's candle that high. So you have to think about where was it located when it opened? What was the level of support that it held? And we can visually see it within this channel. Now, if we held onto that support, now can we break back to the top of the channel? So let's go to a 1 minute time frame, and then I will increase the time frames as I explain. So generally, within the first minutes, I'm really looking at different charts. I want to see what best fits the strategy I'm going to use in order to take a trade long. So I like JP Morgan initially this morning. I'm going to show you exactly where. I liked it right around here, this nice bullish candle. But something told me, like, you know what, you didn't really get in as early as I would like. You might as well wait going to be chasing. So I waited and I let it kind of do its thing and play out. So the next entry point, I noticed that it started to come down, but we never broke to new lows, which is down here. That's the morning low. And that's where you see on the daily it formed that lower wick so far. So this is where I saw it. Zoom in on our 1 minute here. Look at this nice consolidation. Whenever you see something consolidated, you must think, not in this area, you must think, okay, it's consolidating. Now, where can we buy it at? So this is what I noticed, all based on a 1 minute time frame. And I know a lot of people do not like 1 minute charts. They find it too noisy. But I like it in particular for my entry point. So 114.01 was the entry point. So got filled on this candle. And my stop loss, I just used shy a penny under that hammer candle. That was my risk. So my reward in this, I wanted a nice upward movement. First take profit was to tackle this high right here, which was 114.43. My limit was 114.40 to take partial off. Once it gets filled, we can then move up our stop loss to break even. So the thought process here, you move up your stop loss, even if the remaining shares come back against you, you still net positive because you locked in those profits on your first half or your first partial. Now the next thing now, stops raised, we're no longer watching it because we're protected now by that entry point in terms of our stop. So next thing you know, it moves up. All I wanted was 115. That was it. So pretty much $1 per share per entry. I'm a position size trader, and what I mean by that is usually I add into my position to full size, but in this case, I saw a classic breakout. I was already full size, and I just got in the trade, half off, half at target. So it ended up being a lovely trade. And when you do like risk to reward ratio, it was more than like a 2 or 3 to 1 trade in terms
Gotcha.
of risk to what I was risking in order to make what I made.
I like that. Yeah. So you're letting your winners run, and you're cutting those losers short. I like that a lot, especially for day traders. May I ask really quickly?
Sure.
You discussed about writing down or just keeping note of yesterday's, what was it, high and low.
Correct.
How did you use that? How much you use that information for trading today?
So usually I trade gappers. When I mean by gappers, I like stocks that either gap up or gap down, meaning way underneath or below a prior day's closing price. In this case, JP Morgan was not a gapper in that sense. Like we didn't like this candle, this is a gap. You
Yeah.
see how this opened way above the actual close of the high wick? That's a gap. But today ended up being an inside day. So with inside day candles, you kind of have to wait it out a little more patiently just to see what price would do eventually. So it was not a clean gap per se. This is not what I look for in terms of a day trading setup. Just to
Okay.
let you know, it just happened today. There wasn't much in terms of like earnings, for example, what gapped up or what gapped down. So I'm going to go through 2 other charts that hit my gap list, but I did not trade. Number one is usually low volume, and I'm going to bring you to Domino's Pizza.
Okay.
I generally chart it, but I don't trade it because I know how this one trades. So look at this. Now, you're looking at my chart, you're like, oh, all those colors. But all those colors mean something to me. They're very important because I trade very basic. I do not use any indicators at all, period. Support, resistance, candlestick analysis, and we follow the price action. That's it. Look how it came back down to this level over here of prior support. That would have been my target if I traded it. But the thing with Domino's Pizza, as I mentioned, volume, you also have to think about the spread. Usually it has a wide spread, and if we look, this is a 5 minute chart. It didn't necessarily break down right away. So I already moved on and found JP Morgan as well as Johnson and Johnson. So this did not hit in terms of what I wanted it to do in the morning. It went the opposite way of my thought process. And
Mm.
whenever that happens at open, I walk away and find something that coincides with my analysis in the morning.
Mm.
So I prepare pre-market analysis from 8:30 up until probably 9:20, and I have levels where I'm gonna buy this if it hits this level of support to take it up, or I'm gonna short this if it falls underneath this level to take it short. Very basic and very simple. So
Got it.
this was one. Another one was JBHT. This was a gapper to help with your question. So this is what I look for. I look for a clear gap above a prior resistance into a space of nowhere to see if it could gravitate to either a nearest level of support or a nearest level of resistance in terms of a target or a direction. I was bullish on this trade. Very clean analysis. It just had to stay above this level.
Yeah.
This was about $98 and this says 85 cents. I'm going to show you what happened with this. I saw the opportunity, but I didn't take the trade. I did not like the way it moved. Look at this chart. Looks messy, right? A
Mm.
messy mess.
Yeah.
It dropped instantly. I said, oh, I wasn't expecting that. I wanted it to hold this level. Came down next, but it did tweeze a bottom, which is awesome. So this was the indication right here. Nice ping off my support to take it long, but I didn't take that trade. It also provided opportunity to short. It was just a messy chart, not really a picture clean direction in terms of something that continued to trend. Like
Yeah.
JP Morgan example, I like charts that trend, not something that I gotta, okay, I could buy here, sell here, short here. I don't practice scalping. I used to scalp in the past when I used to trade penny stocks.
Right.
But trading mid to large cap stocks, I like to go in with some size and I like to hold it for a dominant trend, at least $1 per share.
Got
A
it.
dollar per share works wonders in the world of day trading. You have 200 shares, $200, 500 shares, you get the point.
Right.
So I look for trends where I can just sit back, hold, and let it do its thing.
Got
We're
it.
gonna come over to this chart, Johnson and Johnson.
Mm.
This played out quickly, very quickly. All I wanted to do was take it to my purple line here, which it happens to be a prior level of support. You can see where it held here. You can see where it kind of channeled here. And this is today's candle. This is a daily chart. You can see where it exactly touched it here. So this is another example of something that gapped. So this gapped down. Generally, I trade in the direction of the gaps. I don't trade opposite gaps unless something hits a resistance and is a clear fade, or if it's oversold and you're buying that oversoldness. For example, like BBBY the other day, it was clearly oversold. It made an all-time low. Instead, it faded upwards. So you have
Gotcha.
to really know what levels or what new highs or new lows that a stock is making, or in this case of Johnson and Johnson, where did it gap? What could be the next support for your potential target? And Johnson and Johnson played out so quickly this morning, and I basically just shorted based off of 1 minute. You can call me that 1 minute trader.
Mm.
That's how I take my entry points. My entry point was 132.80. So really right here. You see
Okay.
pre-market lows. I just wanted to clear this last lower wick of 132.82. So it cleared. That was my short. Got filled on that candle and straight down to the support. That was it. So
Got
we
it.
took it twice. First time, that trade, and then you can notice here it found resistance from this morning and took it another time where it held support. Now it started to hold right around here. So this was another trade. And those were my 3 trades for the day, and I called it a day after that.
That's great. So it sounds like on a lot of days you're able to trade just the first few hours of the day and then go take care of the rest of your life. Would that be pretty accurate of your day?
That's correct. So real story, true story. Prior to the actual trading rooms, I only used to take 1 or 2 trades. Once I made my money, I will log off. But so we made it a point to close the rooms by 12 to 12:30
Mm,
because it makes no sense to sit here and overtrade. The purpose in my mind is different for everyone else. I want to make what I can make and go enjoy the rest of my day.
yeah,
I want my time to do whatever, not my time to sit here and work. That's why I gave up my 9 to 5. So we're
right.
able to capitalize off of time by trading the stock market.
That sounds like a lifestyle. Sounds like a great way to go. Theprofitroom.com. People need to check that out. Links in the description below the video. Just wanted to ask real quick about gap and go. You know, there are
Yep.
other people who feel that it's gap and fill. Like they'll go the opposite direction of the gap. Do you ever do that?
It depends on really the I can't stress that chart. It depends on what the daily looks like in order to gap and basically gap and fill or gap. Oh, so I have an answer to that. It all depends on the percentage of the gaps. So
Okay.
here's a little secret for everyone in case you don't know. Anything that gaps more than like 4% and above, you're not gapping and filling. You're going to gap and go. You're going to take it wherever that gap is. If it gaps down, take it in the direction of the gap.
Mm,
If it gaps up, take it in the direction up. But anything under 4%, 3%, 2%, 1%, that's a gap and fill. You can trade that and basically fill it the next day candle. So that's the difference between the different types of gaps. The gap and fill, I don't trade those because, exception of JP Morgan, I ended up trading that one. This would have been a gap and fill. Basically, it opened here, it filled the gap, we moved higher, right? This one, if you look at it, it required a little bit more work and waiting and patience than I would like.
yeah.
With gap and goes, I can expect that thing's gonna gap go before the first hour even completes in the market. So
Mm.
that's the difference.
Gotcha. Wow, we just got a little secret there. So I'm going to write that down 4% or more for the gap. Just bet that it's probably going to keep going in that same direction. But if
Correct.
it's not a sizable gap, let's say 3%, 2%, 1%, half a percent,
Right.
it's probably going to fill back to, it's probably going to retrace at least partially.
Exactly. Is gonna fail.
Gotcha.
Because
Okay.
those are everyday occurrence, like Apple, Facebook, just typical stocks that always have a small gap. They're either up a half percent or 1% in the morning. By the time you look around, it already retested, fill, and then it probably floats around and do its thing.
Okay. Yeah. Do you have any? You talked about earnings. Do you have anything specific to earnings plays? I mean, oftentimes I'll just stay away from that because it's not even really about charts. It's about fear. It's about greed. It's about sentiment, news. So, do you trade earnings, and how would you do that?
Okay, so the thing with gaps, I'm trading after the emotions, after the reaction. I do not trade earnings per se. So let me give you an example. If something's getting ready to report, I do not have a position open. So when they report, I'm either like, I call that 50-50. That's gambling. You
Mm,
don't know if the stock's going to go up or you don't know if it's going to gap down, right?
right.
So I trade after earnings. We call it the reaction, and that's how gaps are created. So I trade the day that the earnings happen, already news out, it either gap up or down, and I'm trading that reaction.
Mm.
Well, hopefully that answers your question.
That's a great answer. I pretty much have the same policy. A lot of people make bets before earnings because they think they know which way it's going to go, up or down.
Right.
Well, I've got news for everybody. You don't know. Okay, unless you're an insider at the company,
Exactly.
in which case you might be doing something illegal. I don't want you to go to jail like Martha Stewart. Okay, so very
I've
cool.
seen some occasion where people, they bat, they make that great call, and they keep doing it until one time they just get burnt.
Yeah,
It's like, yeah, it's 50-50. It's like, oh, well, they beat the top and bottom number, but they guide lower. So
yeah.
you can't really project that if a company is going to guide lower or anything, like you said, unless you have that inside information.
Right, which most people don't have access to. Theprofitroom.com is the name of the website. This has been so cool. I've learned a bunch of secrets already. Is there anything else you wanted to share with us?
Well, just let me know. It's totally up to you. Another thing that I always like to remind people when it comes to just technical analysis and reading charts, you can apply it to any market. So today, crude oil. I
Okay.
trade the futures as well. I love crude, and specifically in terms of uh, for the futures, because it reminds me of penny stocks.
Hmm.
As I mentioned, I used to trade penny stocks in first 5 years prior to going pro. So I used to trade penny stocks, and it was always 1,000, 2,000. You got to have large size to make 20, 30 cents, you
Hmm.
know?
Yeah.
So when you think of something like crude oil is the equivalent of having 1,000 barrels. So it's like equivalent of having 1,000 shares. Each tick in this case is what they call it, or penny movement is $10.
Right.
So this thing moves $1. That's $1,000 one contract.
Yep.
And not only to also mention that you do not need to have the capital required in order to be a pattern day trader. So pattern day trader rule, you need $25,000 in your account. But however, trading the futures market, you absolutely do not, and you can make the same money or even more.
I,
Right?
although I do want to caution people with that kind of leverage, you got to be
Mm-hmm.
careful. So small
Oh, of
position
course, of
sizes.
course. So here's the thing. So let's just drop to the drop down and go to this is Thinkorswim. They require you to have almost $6,000 in your account, right?
Yeah.
But with any markets, regardless of the leverage, because we know forex is leveraged as well. So regardless of the market, always remember that you need a stop in place. You need your risk management. You need to know exactly what you're willing to lose before you even take the trade.
Yeah.
So that's one way to combat that. It's not really about the leverage, it's about what are you willing to risk before you take the trade. So have that trading plan. Know your entry point, know your stop point, and also know your potential take profit. And just repeat the process. Now, I know when a lot of people start, because I was guilty of this once. When I first started trading, I had no idea about risk. Risk
Mm.
what? Who heard of risk? I just want to see how much money I can make. Forget the risk. You don't even think about it until you're like, oh crap. I didn't know that could go down. Let's say you bought something and it just started falling on you. You didn't know that it's going to go down. That's when you start hoping, praying, wishing.
Right.
So when you incorporate risk management, you're going to realize, okay, you don't have to hope and pray no more because you have a set stop. You're wrong, you're wrong. And that's where technicals, that's why they're so beautiful in my eyes. Like, there's a technical stop, there's a technical entry, and you hit those technicals accurately, you're good to go. You're really
Yeah.
good to go. So I
Very
just
good.
want to make a quick thing. I'm just going to throw
Yep.
crude. I'll just throw it on a 1 hour chart just to give you an insight of support, resistance. It doesn't matter what time frame. I can't stress that enough. You can find support, resistance levels on any time frame, but just recognize what time frame you're trading off of.
Hmm.
Now, crude very technically broke this last swing low, as we can see here. This was the last level of support because it went up, throwing that high. Prior high or resistance, that's a prior resistance level, or was a prior support, becomes new resistance. Price broke through this support. And I believe there was some news because generally crude, it doesn't really trend like this. Today was just crazy. You could
Hmm.
see this drop for 2 hours straight.
Yeah.
So it had to have some news behind it. But this right here, this is about $2.50 one contract. That's $2,500.
Yeah.
But besides the money, it's just like the technical entry in terms of support, resistance, knowing when to short, knowing when to buy, etc.
Gotcha. Wow, I've learned so much from this, and you just have a way about you that is very easy to listen to, and you really get the point across really well. You explain things, unlike a
Thank
lot of there are a lot of YouTubers out there who might be good traders, but I don't even know what they said after I watched the whole video. So, but
what
and you,
I've learned is it's just like anything. Like, there are people that are great traders. Like, we have great traders within our community, but they cannot teach.
yeah,
Right? Some people, oh, why do you even bother teaching if you make so much money? Because if other traders can't teach, then how you expect to learn?
right,
Right? So I break it down as simple as I can, and I realize one of my gifts is to explain this stuff because I can see it in the most simplest way, and I can translate that to the viewer or to whoever the person I'm teaching during the time is.
Gotcha. And you're doing a great job of it. This has
Thank
been
you.
David Modell with Miss Latoya, exclusive interview. But if you want more, you got to go to theprofitroom.com. Link is in the description below this video. Check it, click it, get there, and see what Miss Latoya can teach you today. All right, thanks a lot. You got to come back to my
Thank
program
you.
soon. Thanks a lot, Miss
Awesome.
Latoya.
Thanks for
Appreciate it.
having me.